Hello, everybody. This is Toni Turner, and welcome to the market now as of Friday, February 5th at about 1:15 p.m. Eastern. Well, U.S. employment growth rebounded moderately in January, and job losses in the prior month were deeper than initially thought, underscoring an urgent need for additional relief money from the government to aid the recovery from COVID-19 pandemic. The Labor Department's employment report today showed job losses in manufacturing and commercial construction, two sectors which have been propping up the economy. The White House pushed the U.S. Congress to pass a $1.9 trillion recovery plan today, and I suspect today's higher prices in the market are riding on the back of that news. And on that point, let's go on to three charts that could give us some insight into the week to come. First of all, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. This is the exchange-traded fund that closely follows our benchmark index. And as you may or may not know, we can look at a chart of the S&P 500, but it won't include volume. See the volume down there? That little volume spike. And to me, volume can be pretty darn important at various times when we're looking at it. So yesterday on February 4th, that would have been on Thursday, February 4th, the SPY made yet another all-time closing high at $386.19. That would be about $38.61 on the S&P 500 itself. Now, week before last, as you can see right back here, we made a little quick mini dip. The market went down to, actually right down to the 50-day moving average, closed a penny or two below it, and then started moving up again quickly this week. So that's a good thing. When I captured this chart today, the SPY was trading at yet another new all-time high at $388.31, and that would be about $38.83 on the S&P 500 itself. So now we have new resistance here at 388, price resistance at around 388. We can look down here at the usual support lines that this price has been moving up for some time. The 20-day moving average is coming in at $380.33. That's the red line you see here. And more potential support at the 50-day moving average coming in now at $373.33. So these are always potential support lines. And you can see last week how nicely the 50-day moving average acted as a support line. We call them potential until they're tested because we never know at what point price will fall perhaps to the 20 or 50, and then buyers will put their hands in their pockets or behind their backs, and then price would fall below that. However, the 50-day moving average is an important moving average that most institutional, or the big guys we call them, traders use as well. So that can many times act as support, and if it doesn't, it can act as a warning that price could go lower. But today, anyway, we're having a good time. Market's in a nice uptrend, making new highs. Not much we can argue with today. So please trade wisely in the coming week, and do maintain your risk management. Our next chart today is a chart of the Invesco QQQ. As you all know, this does represent the index, the NASDAQ 100, very important index in our stock market. Top holdings include Apple, Amazon, Alphabet, Facebook, and so forth. Now, the QQQ right now, as we speak, is as well making yet a new all-time closing high at the moment anyway. We don't know if it'll close at these highs, but is doing it right now at $332.11. Now, I am noting today that we do have pretty low volume, even though we're partway through the day. The volume is low, so I always keep an eye on new highs on low volume. What does that mean? Well, sometimes it doesn't turn out to mean anything, and sometimes it means that there's this big party being held and not many people are there. So I'm going to keep an eye on this anyway. It made a new all-time closing high before today, actually on February 4th at $330.33. So now we can say price resistance has moved up to the 332, 333 zone for the Qs. And currently the 20-day moving average is coming in at 321.62. The 50-day important is coming in here at $312.67. So like the SPYs, we have nothing to argue with today. It's all very good. We do have this low volume I'm watching. The RSI, we haven't mentioned that in a while. The 14-day RSI, the line itself is just bumping its head up on this overbought line, but not actually moving up over it. And this can stay true for a long, long time while the asset you're looking at can not quite be overbought, but it just keeps moving in an uptrend. For an example of price actually getting overbought, you can look left with me back here in September, where you see the RSI actually moved up over the overbought line, became truly overbought as we call it, and then look up and see what happened at that point. Price moved up very quickly, swiftly, at a steep angle, and then profit taking came in, at least for a period of time, about a month or so. So we're not at that point again here. However, again, the warning sign I have today is low volume. We'll have to see what happens in the coming week. And in the coming week, we're getting into one of the final weeks of earnings season. So it could still be volatile. Some of the companies announcing next week are Disney, Cisco, Uber, and GM, quite a few. After next week, the earnings season should start tapering off a little bit. So again, no problems today so far. Everything's moving up nicely, but I never become too calm. I still remain watchful. So keep an eye on the QQQ in the coming week. Our last chart today is one we haven't looked at in quite some time. This is the Spider S&P Home Builders ETF, the XHB. I do know from looking around and from talking to folks in other states that building contractors are going as fast as they can right now, and that many of them, even in the last week, have had to say, okay, we're taking waiting lists only. So I know that they're building like crazy in most parts of the country. The XHB has 35 holdings. The top holdings are Williams-Sonoma, Lennar, that's of course Lennar Homes, Johnson Controls, the Pulte Group, D.R. Horton Homes. It also has Home Depot and a lot of other building supplies in it. Now, we're looking at this daily chart of the XHB. We can see that since May, on the left side of this chart, at any rate, the XHB has been moving up in a pretty nice uptrend, following and riding atop the 50 and the 20-day moving averages, moved sideways for a while here, and then started up making, well, I can't draw a straight line, started making higher lows again, and in the last few weeks in January, bumped up, broke out a little bit, fell down, and then bounced off the 20-day moving average, and is up again today. And when I captured this chart, the XHB was trading at $63.55. Now, January 22nd, back here, was actually the new all-time closing high for the XHB. New all-time closing high was on January 22nd, and at $63.56. So again, it's moving up today. It's getting close to that price again. If the XHB in the coming week can remain above the 50-day moving average that's coming in right now at $59.25, if it can remain above that, and we note today that volume is a little bit low as well, you see down here. So if it remains above this 50-day moving average in the coming week, I would like to put on a position if it remains positive, but it's only going to be half of the position that I want. So if I'm intending to buy 500 shares, I'll just buy 250 shares, maybe 300. And then I'm going to wait to see if the XHB can break above resistance at $64.50. That's what I'm going to wait to see. And if it can, I may add some shares to my position. And of course, by then I will also have in a trailing stop. So you may want to keep an eye on the XHB in the coming week. And now, before we go on to final thoughts, please know that if you'd like to become a more successful trader, this is a great time to check out my trader training programs. You're going to love my powerful strategies devoted to swing trading, trend trading, bottom fishing, and many, many more. My programs are easy to understand, and they can help you increase your gains quickly and easily. To see all of my online training programs, simply go to the link on this screen or click on the orange button below. And now on for final thoughts. Okay, the question we're asking today is, when I trade, do I expect instant or at least very fast results? When I trade, do I expect instant or fast results? Now, let's think about this. Farmers do well as traders, and believe me, most farmers are traders because they trade their commodities. Farmers do well as traders because they know it takes a while to bring in the harvest. They also know that skipping one step of the preparation phase can cause the entire crop to be ruined. As traders, when we start to jump into a trade and we're unprepared, we're not knowing anything about the company, the sector it's in, even just basic fundamentals. We don't know where our protective stop should be or even where our profit target should be. When we jump into a trade like that, then we are skipping plans of the preparation phase in hopes to experience a quick profit. Once in a very long while, that will work, and more often it doesn't. And trust me on this, I've been trading for way over 20 years. Now, we have learned as traders that trading should be easy. It's not our fault. There are many online ads selling that dream. And in the long term, however, it's not always that easy. Trading, please know, is not always a walk in the park. Now, as you all know by now, those of you who have been trading for the most part takes periods of planning, and actually the more the better. Think about it. Time is indispensable, and using time to plan and prepare saves actual working time. So the bottom line is here, time is essential for accomplishment. Great trading results do not arrive instantly. Very rarely does that happen, certainly not on a consistent basis. Now, while our market has been really good at producing gratifying and sometimes quick results lately, and that's great, this new high everyday environment is probably not going to last forever. One thing we do know for sure is the market is going to change. So just like farming, good traders spend more time planning, they manage their risk wisely, they avoid the expectation of instant results. In the long run, this is the successful professional's way of trading. Please make it yours. Okay, please make it yours. Finally, if you'd like to become a more successful trader, check out my trader training programs. To see all of my online training programs, speaking of planning, right, simply go to the link on this screen or click on the orange button below. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.